And in today's video, I want to show you how you can calculate your taxes when you're an LLC operating as an S Corp or just an S Corp. So stay to the end of the video and I guarantee you it'll be worth it. All right, there are several advantages to forming a business entity. For one, it's going to protect your personal assets, but also it's going to give you some options as far as taxes are concerned. And if you choose the right one, you can actually pay fewer taxes in the long run. Here are two examples that'll help you reduce your taxes. You can form an S Corp or you can form a limited liability company and prefer to be taxed as an S Corp. And to understand this, you have to first understand exactly what kind of taxes you have to pay as an S Corp. So for any business, there are a few types of taxes. Number one, you have to pay employment tax, you have to pay payroll tax, and you also have to pay self-employment tax. So if you're self-employed, you may have to pay two different taxes. You pay the tax that the employer would pay, but you also have to pay taxes that are paid by the employee. On top of that, you have to pay federal income tax. And federal income tax, that's the tax you pay for any profit that your business makes. Now, savvy business owners are going to find some deductions here, but we all have to pay it. The amount you pay is going to depend on your tax bracket, but you're going to have to pay taxes on your salary as well as your employment tax. But here's where it gets good. So if you're taxed as a standard LLC, you have to pay employment tax on your entire salary. But if you're taxed as an S Corp, you can choose. But if you're taxed as an S Corp, you can choose to take out money one of two ways. The first way is taking it out as a salary, where you'll pay employment tax just as a normal employee would. The second way is as a distribution. And for that, you only need to pay federal income tax. And when you look at the number, the differences can actually be substantial. So for example, if you take $70,000 out of a business as a standard LLC, you'll end up paying $10,710 in employment tax. In contrast, if you take out $45,000 as a salary and $25,000 as distributions, you would only have to pay $6,885, saving you $3,825. Which brings us to this calculator. This calculator is an S Corp tax calculator, which is going to allow you to choose how much you withdraw from your business every year. You can also set aside how much of a salary you want to pay yourself as an S Corp. And then once you scroll down, it'll show you the calculations at the bottom of the calculator. It's extremely helpful. I'll leave a link at the bottom of this video so you can click on the calculator and you can do the calculations yourself because it's worth it. So the primary reason why most of us form an LLC over an S Corp is because it's easier to set up. But just keep in mind that you can also file as an LLC but still get taxed as an S Corp. If you go with a company like InkFile, they'll take care of the filing on your behalf. It's a form 2553 and they'll file it for you with the IRS. If you do choose to form an S Corp, there will be some more stringent rules that you have to abide by. So just be aware there is a difference between the two, but they're both doable for a small business owner. And with that said, I'll close out this video. Make sure you check out the calculator. I think it will do you tons of good to know what your numbers are, and it will also help you to figure out how you should be taxed at the end of the year. Once again, my name is Rodney. Hope you enjoyed the video. Make sure you comment, subscribe, and I will see you in the next one. Take it easy.